Welcome everyone. Before I say something, my colleague Mr. Sandeep will indicate you about the financials, then I'll take over.
Yeah, good afternoon everyone. This is Sandeep Gupta. So I welcome all of you on Shalimar earning call for the first quarter 1920. So first of all, as you are aware that we are well established presence in both decorative and industrial paint. In Q1, we accounted for 63% decorative and industrial paint accounted for 37% of the total revenues. As you know, we are well recognized for our protective coating solution in industrial segment, and we offer a comprehensive product portfolio catering to the high growth decorative segment. Coming to the quarter one performance, I'd like to mention that our revenue grew by 65% YOY from 51.6 crore in Q1 FY19 to rupees 85.1 crore in Q1 FY20, and EBIT significant improvement, and in the YOY quarter one it's a negative 12 crore in Q1 FY19 to 0.26 crore in Q1 FY20. There's a significant improvement in our EBITDA, and we see the volume production growth. So there's a production YOY, there's a 50% production growth in both the plant. This is Chennai and Secunderabad, and if we go by sales volume, our sales volumes are growing in last quarter continuously, and our region-wise revenue share stood at 42% in north, 25% in east, 19% in south, and 14% in west. As you know that we have plant in all region except east. That mainly we have plant in Secunderabad, UP, plant in Nashik, Maharashtra, which has recently started the production, and Chennai in Tamil Nadu. So we are major market, I think, is northern and eastern market, and we are growing in the other market as well. So these plants are strategically located to cater to growing demand in various markets across India. We are strengthening our distribution network to penetrate in existing and new markets. Currently we are operating through 3,500 plus active dealers, 33 sales depots, and 4 regional distribution and central warehouses, with presence across 700 cities in India. So our focus is now on strengthening our dealer management, intensifying market and branding efforts. We think we have enough capacity to grow our business over the near term. So with this, we would like to open the floor for. So our Vice Chair, Mr. Ashok Gupta would.
Good afternoon once again. I'm Ashok Gupta here. Let me give you what has been happening at Shalimar for past few months. First of all, we are happy to inform you that quarter after quarter we are improving volumes. Of course, this is true of the entire industry. Paint is one industry which, despite the slowdown in the economy, has been trying to keep afloat, and the growth is continuing. The industry is still growing at around 10% per annum. So volumes are growing. Over last year, our volumes have grown by more than 50-60%. This is the first quarter after so many quarters that we have become EBITDA positive. Our next goal is to become cash positive, and then of course net positive. Our capacity we have created sufficiently. I'm again happy to inform you that the plant which got fired in November 2016 and which we started construction in September 2018, we have been able to complete in a record 9 months. The plant is operational now and production has started. That's at Nashik. With this plant, today I have a capacity whereby I can sell around 750 to 800 crores of paint every year, from the current level of around 350 to 400 crores. With this very small capex, we can take it to 1,000 crore, and that's our goal. Within next 2.5 years, we want to take it to 1,000 crores per annum, and we are hoping that with this increase in volumes, our margins also will improve. From EBITDA, which is almost zero now, we are looking at EBITDA level of at least 10% in next 2 years. There are a lot of other things happening. We have got a brand campaign, Har Rang Khoobsurat, which I think has been really taken well by the market, getting good response. We are focusing a lot on the R&D and on many other aspects of the business, which should be giving us good results in days to come. With these few remarks, I shall invite all of you to please have your question and answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Participants are requested to use handsets while asking a question. Anyone who has a question may press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who has a question may press star and 1. Our first question is from the line of Dhaval Shah from Girik Capital. Please go ahead.
Hello? Hello? Hello?
We can hear you, Mr. Shah. Please
okay.
Go ahead.
Yeah. Hi, sir. So just one question on the entire industry level. What is driving such high growth rate for the industry, even in such a difficult macro environment as we all are seeing around?
You see, what happens in paint industry is there are two parts of the demand. There is demand for the fresh production and demand for the replacement market.
Correct.
So most of the demand comes from the replacement market. So there are three distinct segments. One is a decorative, which is basically buildings. One is a corrosion protection, which is basically steel structures, factories, industries, pipes. And the third is automobile. Now, automobile, the fresh demand is less. That is one sector which is affected and which is reducing the entire industry as a whole. The second is corrosion resistance. Here the demand continues to be strong because all the factories which are there, they need to maintain them. And to maintain them, and since they are not constructing a lot more new ones, so they need paints. And third is decorative. Here again, sizable demand comes from your repainting of your houses. And that demand is normally steady.
Okay. So, what would be, so two questions. So, what would be, the opportunity size in each three segment, and where are we going to focus? And B, is there you seeing a reduction in the repainting cycle over last couple of years, and how would you see this going forward? If you can talk about any global benchmark also, which you see as a peer country where repainting cycle keeps on going down with increasing in per capita consumption. So yeah.
So of all the paint consumed in the country, about 70% goes for decorative, which is mostly households and buildings.
Yes.
And 30 is accounted for by automotive and corrosion resistance, or corrosion protection rather. So that is almost 50-50. So far as we are concerned, we are not
the size of this in decorative and auto and corrosion industry size in India?
Industry size as a whole is around 50,000 crores. So which makes it the decoratives to be around 35,000 crores.
Okay.
And balance 15,000 crores is between the other segments of corrosion protection and automobile and miscellaneous.
Correct.
Industrial paint.
And this would be largely organized, or would you see any unorganized also in this?
So of the total paint produced, around 15% or so would be in unorganized or small players, and 85% plus would be from organized or large players.
Okay. Perfect. And yes, so now about Shalimar, what is the focus area? Where are we going to focus and growth? How are we?
So I was mentioning that we are not there in automobile.
Yes.
We are significantly strong in corrosion protection, particularly on steel. And so that is our focus area. We are again focusing on decorative. Within decorative, there are two parts. One is a finish coat you have, one is the interior coats. We are very strong in interior coats. So we are still not very strong in the finish coat, the outer coat you see. So we are focusing on our strengths. We are focusing on interior coats, what goes below the finish coat. We are also working on finish coat, but that is there our share is much less. There Asian and Berger are much stronger players. So our focus is basically currently on two products. One is protection coating, which goes for industrial or factories or pipes or steel, and on inner coats, which are basically primers or putty and things like this. Also geographically, we are focusing on smaller towns.
Okay. And so our advertisement would be more focused on the industrial side, right?
No. So what happens is, so for industry is concerned, they don't look for advertisement. For them, it's experience. So for industries, we are working on experience side. So we are making sure that their experience with Shalimar is par excellence, and we are succeeding in that endeavor. So far as decorative is concerned, we are working on our marketing or advertisements.
Okay. And would the largest two, Berger and Asian, be also strong in this corrosion protection?
They are strong, but they are strong because they are strong in every area.
Yes.
They are just not strong only in this. But on the other hand, we are strong in these two areas much more than others. But if I have to rank, I will say Berger and Asian are very strong in top coat.
In top coat, finish coat, yeah.
Finish coat, yes.
Okay. And the last question, you mentioned 1,000 crore number. So what was that regarding? I just missed that comment.
So you see, current capacity, we have got 3 plants. With these 3 plants, I can produce around 7,000 KL of paint per month, which will give me a yearly revenue of around 750 to 800 crores. With a small investment of 5 to 10 crores only, I can create a capacity which can give me a revenue of 1,000 crores per annum.
Okay. Great. And sir, how is the working capital cycle for you?
It is a bit, so there are 2 parts of working capital. One is a raw material and one is a debtors.
Yes.
On the raw material side, it is around 65 to 70 days, which is in terms of the normal industry average.
Okay.
But on the debtor side, it is around 80 to 90 days. Now that is much higher than the industry average, which hovers around 35 to 40 days. We are having some issues on the debtor side because for a large number of years, we were not really present significantly in the market. We are trying to re-enter the market. So we are having some kind of a disadvantage. We have to give some more attention to the dealers to come to us. In due course of time, we hope to bring it down to 60 to 70 days.
Okay, fine, sir. Thank you very much.
Thank you.
Thank you. A reminder to our participants, if you wish to ask a question, you may press star and 1. We'll take our next question from the line of Naitik Modi from OHM Group. Please go ahead.
Thank you for the opportunity. Sir, could you please explain what is driving sales for us within both the segments? Where is the volume growth coming from? Is it addition of new dealers that are bringing in the sales, or is it the existing dealers? What is our focus right now?
So, see, the Shalimar has a very small market share. It's less than 1%. With that market share, we have to decide where to focus for. If you would have gone for large cities or large metros, you would have faced competition from the large players. So deliberately, we are going in for smaller towns. And within towns and cities also, we are looking at outskirts. So our volume growth is mainly coming from smaller towns like Siliguri, Guwahati, Jammu, Ludhiana, Zirakpur, Himachal. These are the areas where we are getting, or for that matter in West as well as in South, Cochin. These are the areas we are getting a good growth. And within this area, as I mentioned to you, outskirts, even though we are making new dealers every month, but bulk of the sales are still coming from old dealers. So still our 80 to 90% sale is coming from old dealers and around 20% is coming from the new dealers.
Okay. And in terms of a customer looking for coming to the shop and asking for a Shalimar paint, how do you ensure that?
So, see, like any other consumer product, For a dealer, it is very important that his basic needs are met. And what are the basic needs of a dealer? The three needs he has. A good quality product. Second, a fast delivery. And third, basic hygiene factor like his accounts, his credit note, the promises we have made to him. And fourth is that people should accept the product. I think we are working on all the four areas. We have made sure the supplies are made almost instantaneously. Quality of Shalimar has been always known to be good and continues to be good, so we have absolutely no problem. Brand name of Shalimar is already accepted all over the country, even in small villages. And we have, in last 6 months, taken very careful working on hygiene factors, their accounts, their debit notes, their credit notes, and all those things. So though these things may look minor, but they are very important from a dealer point of view. By taking care of these things, we are making sure that the dealer is happy. Second thing what happens for a Shalimar paint is, because not every shopkeeper in the city keeps Shalimar paint, his competition is less. And because competition is less, he can make some money. In many large brands, because the competition is more, everybody is keeping it, margins reduce. So A, for us, we are taking care of basic factors. Second, the margins are slightly better for Shalimar. Thirdly, we give some more credit. People normally give 15, 20 days, 30 days. We even give 45 days. And fifthly, what we are doing is we are going to the painters. So we are having a lot of painters made incentive to the painters to buy Shalimar.
So what are the kind of margins that we are passing on to our dealers?
So,
and what are those compared to the other industry players like Asian Paint and Berger?
So whatever Asian, Berger and other players pass, our margins, the dealer, which suppose from the large player, he is earning a margin of, let us say, 7 to 8%. From us, he will be earning a margin of around 9 to 10%, 2 to 2.5%, 3% more.
And over and above that, we are also giving them higher credit periods.
We are giving them, yes, 15 days more.
Okay. So, sir, at what point do we think that either one of them will narrow down or both of them will narrow down?
I don't plan to reduce either of them for next 1 year. For next year, my focus will be on volumes. For next 1 year, my focus will be on building relationship, and next 1 year, I will be working on creating a clean hygiene working environment. Once we have reached a stage when we have a good base, because you see again, we are coming from a very difficult period. So people have to have a faith in us that we are here for a long time and we are here to, they can depend on us, they can have trust on us. Till that trust is created, I am not going to disturb the system. After 1 year, I will start looking at reducing both of them.
Okay, sir. Thank you.
Thank you. Reminder to our participants, if you wish to ask a question, you may press star and 1. Our next question is from the line of Yogesh Bhatia from Sequent Investments. Please go ahead.
Hello.
Yes, please.
Sir, I wanted to know we had targeted 450 crores revenue this year. So, looking at the muted quarter we had this year, how do you think this year shall pan out for us?
If we see our growth till now, first quarter we made around 85 crores, and if we see the quarter second we are looking at, which will be around 95 crores. Going by this method, we should be close to 450. If not 450, then definitely between 425 to 450 crores. But we are still working on, because typically in paint industry, the real season starts after the rains, which is almost end of August.
Correct. And so now, if I'm correct, all our plants are operational. Correct?
All our plants are operational. We are fully operational. We are totally. That is why we have done all the things keeping that in mind. We made our Nashik plant operational in July itself, so that we are ready for the season when it comes from August, September.
Correct. And sir, what is the volume figure for Q1 FY20?
The volume figure for Q1 FY20 is about 9,325 KL.
Okay, and this was for Q4, I think it was 8,800 KL, right?
You are right, 8,800 KL. So volume-wise we have grown, yes.
Volume-wise we have grown. And sir, what is the current debt level?
110 crores total, all inclusive.
All inclusive.
That is bank's debt.
Okay. I I just wanted to know what is the addressable market size for the protection coating. Like you said, there are a lot of outskirts and smaller towns that we are targeting. But if there is there a number that we can give, or it's a very huge market for us to the addressable market in the north, in the east, if I have to see?
So two markets we are talking about. We are talking of decorative. We are talking of protective coatings, which are mostly industrial. The market for protective coating industrial will be around 3,000 crores per annum. So even if I get 5%, I'll get a pretty good amount of it. And I'm looking at maximum 10% of that market. That will make it 300 crores per annum. And so far as decorative is concerned, so obviously I will not know, because we are not only selling in up country market, we are also selling in main cities like Delhi and Bombay. But total market being 35,000, and I am looking for hardly a share of 1.5%. I think market is too big for me.
Correct. Okay, sir. Thank you. That should be all. I'll get back in the queue if I have something.
Thank you so much.
Thank you.
Thank you. Our next question is from the line of Ashil Shah, an individual investor. Please go ahead.
Hi, sir. Firstly, congratulations on the great growth on revenue. I had a question regarding the revenue target. You said this year you're looking at around 450 CR. Beyond that, are you looking, what is the growth projection that you all are seeing? And additionally, what is the EBITDA margin that you all are looking to maintain? Because I think this quarter, as compared to last quarter, your raw material cost as a percentage of revenue ticked up a little bit. Just wanted to know the reasoning for that, and if what you all are expecting going forward.
Okay, so what we are planning is that let us try to reach 450 this year, which is itself is a tough target, but we are working towards it. And thereon we will work on again significant growth, definitely more than 30-35% per annum. And so far as raw material is concerned, our raw material cost as a percentage of our revenue is typically between 68 to 69%. There might have been some quarters when we might have taken some write-offs or something, but on an average, this quarter it was around 60 to 69%, and a couple of quarters back it used to be 73-74%. Industry average will be between 62 to 65%. So I think we're still far away. We have to reduce our cost of raw material by around 5% to be in the industry league.
Okay, thank you. And about the EBITDA margin? Do you have any?
We are at zero. I think with the kind of product mix and positioning we have, we can look at EBITDA margin 2 years down the line of around 10%, 10 to 12%. The industry average is around 16 to 18%.
Okay, thank you.
Thank you. Our next question is from the line of Sachin Kasera from Swan Investment Managers. Please go ahead.
Good afternoon, sir, and congrats for an improved set of numbers. Sir, this is regarding one of the previous questions wherein you said that, we need to reduce our raw material costs further as a percentage of sales. So this will be driven by better purchase power as our volumes and, payment patterns improve, or it will be driven by a better realization?
So two factors are there. One is as the volumes increase, our purchasing improves. Our method of purchasing. So what is happening is today we are buying few things in small barrels. We are going to convert, instead of buying a small barrel, into large tankers. So that change in behavior will reduce some cost. Secondly, we are going in for a slight backward integration marginally by making our own L kits. That should reduce something. Thirdly, instead of buying it from the local dealers and distributors, we are trying to import directly from wherever it is required to be, either China or Korea. These three strategies should help us in reducing our cost.
So will this not lead to higher inventory for us, or this still you will do maintain the inventory level at the current stage?
Inventory level will be maintained at this level, because once the volume slightly improves, the inventory level per day will come down. Number of days.
Sir, what is the current working capital cycle, and how do you see that going ahead?
So there are two aspects to it. One is the inventory. Inventory typically we have around 70 days. industry average will be around 60-65 days. With volume growth, we will bring it down to 60-65 days. The issue is on the debtor side. But debtors are still around 80-85 days, and industrial side is around 90 days, decorative side is around 60 days. So there we have to do something to bring it down to 60-65 days. Industry average is around 45 to 60 days. So we have some distance to be covered there. I think it will take me some time to do it because still we are not that strong in the market that I can demand my payment at my terms. So I still kind of compromised.
Sure. And on the creditor, sir, what is the current credit cycle we are enjoying for suppliers, or it's all payment in cash?
No, we are enjoying a credit cycle of between 70 to 80 days.
But that is because of the fact that earlier we were having financial difficulties and we were making delayed payments, or this is now the standard cycle for us post the...
So for the whole industry, the standard payment terms are between 60 to 90 days. The entire industry works on 60 to 90 days payment cycle, payment period, and so also are we. So we are totally in sync with the industry practices.
So basically, inventory we can say around 5 to 7 days and around 20-25 days in debtor over 2 to 3 years. That is the way to look at working capital.
Yeah, correct.
Secondly, sir, this raw material benefit, when do we start seeing the benefit of this efficient raw material procurement from Q2 this quarter onwards, or it will take another 2-3 quarters before we start seeing the benefit?
It is a gradual process. What we have seen last 2-3 quarters also, every quarter the raw material as a part of the sales reduces by a percentage or so. So for example, last quarter was around 68%, and this quarter I am expecting 67%, and by year end I am expecting 65%. So it is a gradual process because so many things we are trying to take up, and they start giving you benefit one by one.
Super. Sir, just one question on the plant side or the manufacturing side. How are we now post this capex that we have done? How are our plants and their condition, the quality vis-a-vis the quality of the competition? Are we now benchmarking at par, or we still need to improve on the quality and the manufacturing processes?
So, you see, like any other consumer products, everybody has their own strengths and weaknesses. So, let me focus on my strengths. So, I was mentioning to you inner paints, which are like primers, which are like putty, which are like enamels, aluminum paints, paint for the marine industry. Our paints are considered in the market to be better than the average industry paints. Other areas like finish coats, like distemper, and like some of the enamels, we are on an average. We are not taken to be superior. So we have a couple of paints which are supposed to be even better than the industry average. We are some paints which are equal to industry average. We don't have any paint which is there inferior to industry average.
Sir, you mentioned these 4 or 5 segments where, the perception of the market and the quality is better than competition. How big are these segments, and what is the type of premium we are able to get in these segments vis-a-vis the industry average or the nearest peer?
So what typically happens in the industry is that for some reason or other, this industry has a good practice of not having premiums per se, except in terms of schemes. So most of the players, the prices are same, the schemes are similar. And so to sell our paints, we have to give slightly more schemes. So as I mentioned earlier, 2 to 3%, sometimes 4% we give more than what the competition gives. To that extent, our margins reduce. Having said that, better quality of paint ensures that more quantity of that sells. So it is easier for me to sell aluminum paints, it's easier for me to sell interior primers. So that only facilitates selling more. Price-wise, the differences are very less. However, what some people have done is, of the same paint, they have taken out variants which are more expensive. So, but that can happen only for the finish paints. We will also do that exercise. Currently, for the finish coat, we have 4 different variants. What is selling for us is the economical variant currently, but in due course of time, we will increase our share of the higher priced variants as well.
And we will be looking to gain market share from the unorganized segment, or we will need to find the bigger guys to grow volumes? I know our base is very small, so not too much?
It doesn't matter, sir. I think our base is so small that we will not have to take market share from anybody. It is too small a share, not even 1%. That just doesn't matter. It just comes in. It's like loose change.
And sir, lastly, now what is the capex we need to do this year and next year?
We are not doing any capex. So maybe next year I will spend some 5-7 crores on creating some additional capacity in my Nashik plant. Otherwise, there is no capex required till I reach a sales figure of 1,000 crores.
So, which means we should be able to see some debt reduction in the next 3-4 quarters of the current year.
Yeah. So, to the extent that my working capital needs may increase, you may not see absolute debt reduction, but in number of days, definitely.
Super. Thank you and all the best.
Thank you so much, please.
Thank you. Our next question is from the line of Ashil Shah, an individual investor. Please go ahead.
Hi, sir. Asking a question again. You have mentioned in the along with the quarterly financials that you released that the CEO and MD is being released. Is there any update on who is the new person who will be replacing him? And secondly, there's also a mention of a delay in the starting of the plant to 30th September. Is there any reason for that, and are we on track to start it on 30th September now, or is there any update on that?
So far as MD is concerned, the MD term was over on 11th of August, and we are looking to have somebody from the industry, particularly from the operational side, mostly from sales marketing side, and we have fixed it in a period of around 6 months to find out somebody and put in place. Till that time, somebody really comes in, I, as a vice chairman, will be looking after along with a team of professionals. I'll be supervising the team there. And so far as delay is concerned, Nashik plant has become operational in the month of July itself. It is completely operational now. What is being mentioned is that we have started making paints from the what we call emulsions based on water supply. Now we will start making paints based on solvents, which is basically enamels, from 16th, 17th August. That's why it has said that the plant will become entirely operational in all variants of paint by the end of September. But the paints are completely can be made at any point of time. It's only that phasing of some varieties will be there from July to August end.
Okay, sir. Thank you.
Thank you. A reminder to our participants, if you wish to ask a question, you may press star and 1. Our next question is from the line of Dhaval Shah from Girik Capital. Please go ahead.
Yes, sir. Sir, one of the other upcoming paint company, Indigo Paints, it's backed by a private equity fund. Do you see any sort of aggressive business strategies being adopted by them the way we see other PE-backed companies adopting it?
I quite agree with you. They will obviously go aggressive, will go pretty aggressive. So what we are trying to do is we are trying to create our own niche. See, paint industry is such that it has got a significant number of large players and very well-established players. And for a small company like Shalimar Paints, though well-known in the country, it's difficult to take them headlong.
Yes.
So we have tried to work out a small niche for ourselves, as I mentioned to you, in protective coating. Fortunately, Indigo and many other paint companies are really not having that much focus on this small segment.
Okay.
And we have an advantage there because we are see, in this industry, what happens in protective coating is people go by their experiences. And we have given them experience over a period of last 10-15 years, and they're very happy with it. So the changeover is very difficult. So protective coating will try to protect ourselves. Second thing is, as I mentioned, we are going in small villages. In the small villages, towns, and tehsils, people go by memory. Shalimar Paint, fortunately, is known to them for ages. But it will be difficult for Indigo to create the same kind of impression among them. So we have chosen 2 markets where we will have an advantage for a couple of years to come. Indigo will definitely be a competitor, a significant competitor. Our expectation is, like all other paint companies, they will focus on large metros. So deliberately, we are not putting too much resources on the large metros.
Okay. And sir, how is JSW in terms of competition? Even they have started, I think 1-2 years back, or maybe this year only they have started. Their focus is also the same as ours, or they are more on the finish side?
I think you are rightly pointed out. So the JSW is, to our best of our knowledge, available in the public domain. They are putting on coil coatings. So coil coating is something which we are not there, which is basically for their own in-house production. They are a large producer of steel, and out of that steel, they produce large quantities of colored coated sheets, and they will be making paint perhaps for that application mostly. Secondly, what they have come out with in the market is finish coatings. So I think they are trying to position themselves as against Asian, and that also in finish coating. And to that extent, they do not affect us directly.
Okay. And Indigo is also focusing on the finish side, as you mentioned.
I think so, even though they are present in variant, but if you see their ad campaign, everything seems to be on a finish coat.
Understood. Perfect, sir. Okay. Thank you.
Thank you. Any participant who wishes to ask a question may press star and 1. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. We have our next question from the line of Sachin Kasera from Swan Investment Managers. Please go ahead.
Yes, sir. I'm sorry, I'm not sure if this question has already been asked, but what are the changes you are looking to bring about on the distribution front?
Well, I think the consumer industry, particularly paint, depends on distribution itself. So we are having taken 3 or 4 initiatives on the distribution side. The one is what is important for a distributor is both in terms of quality and in terms of supply. We have already opened 33 depots all over the country to make sure that a dealer gets a material within hours of his requirement. So that is helping us a lot. Second thing we are doing is we are touching upon people who were to an extent not very much focused on. So we were talking to people who are slightly on the outskirts of cities, far away, villages, and things like that. So we are widening our distribution to interiors. That is again another strategy we are adopting, and it is helping us. So with this focus, and of course we are looking at the painter schemes. With this we are getting new dealers. So a lot of new dealers have joined us in the last 4 or 5 months. Our dealer network has also increased. We are also coming up with some unique scheme for dealers. With this, we are having a good growth in our distribution network.
So what has been the increase in our dealer network you mentioned last 4 or 5 months?
Currently, we have a distribution dealer network around 3,500 dealers, out of which around 2,500 are pretty active. And on an average, we are adding around 150 to 200 dealers every month.
And are any of these exclusive to us or most of them are multi-brand?
I will say only 5% may be exclusive, 95% are multi-brand. But those exclusive are pretty big, but 95% are multi-brand.
So this 5% which are exclusive to us, they would be accounting for like 25-30% of our volumes?
I think 10 to 12%. 10 to 12% of volume must be from the 5% exclusive dealers.
Mr. Kasera, do you have any more questions?
No. Thank you. I'm done.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the floor back to Mr. Ayush Chaturvedi for closing comments. Over to you, sir.
Yeah. Thanks, Inba. I would like to thank the management for giving us the opportunity to host the call and to all the participants for their presence. So, would you like to make any closing remarks?
I'll only add that Shalimar is on the recovery path, and in days to come, you will see much better performance from us. Thank you so much for your cooperation. Thank you.